Hey guys, now as you know, tax season is right around the corner, so it's a good time to start gathering all of your tax questions. Today we're here with Chris Reeder from CDRCPA Inc. He has a blog that's posted, has a lot of questions, answers to a lot of questions, and what we're going to do now is just interview him and ask some of these most popular questions. So we'll go ahead and get started now. Chris, how you doing?
Good, and yourself, Matt?
I'm doing well, thank you. So first off, what is a CPA?
Well, CPA first, let's to break it down and let's take the initials. CPA stands for Certified Public Accountant. Okay? And what a CPA is, he qualifies to get that license. It's a state license, licensed by the state of California, the accountancy, State Board of Accountancy. Okay? And he qualifies to get that license because he's passed certain education, certain experience, and certain examination requirements. And they're a lot more stringent than your normal tax preparer.
Okay. So why would someone seek out a CPA as opposed to maybe like an H&R Block, Jack and Hewitt, or even buying TurboTax?
Okay, so when you look at TurboTax, I've always said, you know, software is as good as you know the answers for. Okay,
Right.
so the software itself, TurboTax, and there's other ones out there. There's, you know, WriteTax, and there's all kinds of other software you can buy at Staples and stuff like that.
Yeah.
And my issue is always, well, if you know the right answer, then you're pretty safe with using the software. But if you don't know what the right answer is, how do you know the software gave you the right answer? Right? So, and now we deal with H&R Block and, you know, and Jackson Hewitt and Liberty's tax services and stuff like that. Most of those people don't have, number one, the education that we do, number two, the experience that we do, and number three, they've never passed an exam even close to what we passed. Our exam is 19.5 hours long, which is 2.5 days. Most people that are licensed to prepare taxes have to pass like a hour-and-a-half exam. Okay, and EAs, which is called an enrolled agent, they have to pass a 2.5-hour exam. Okay, so, and they don't have the education requirements that we do. Like, you have to have a bachelor's of science degree to become a CPA, and most of that education has to be in accounting. Can't be just, you know, liberal arts, you know, like psychology and stuff like that. It has to be in accounting. And then the experience factor, you have to literally work for another CPA firm for a minimum of 2 years to get the experience that's required to get the license. Plus you have to pass the exam. So you got to have all three of those things in place. And most people that work for H&R Block and Jackson Hewitt and Liberty Tax Service, they don't have to have hardly any of that, if any, to prepare taxes.
Wow.
So,
Okay. So what happens if, let's say I'm doing taxes either with a CPA or with an H&R Block, and I owe money? If I owed money last year, am I able to get a return this year?
well, if you're getting a refund this year and you owed money from last year, they will keep the refund that you get up to the amount you were going to get a refund this year, or what you owed last year. If you owed less than what you're going to get a refund this year, you'll get the balance. But the IRS is pretty good about being able to track how much you owe them and stuff like that. And you can get on payments from the get-go from filing the tax return. You can get on a payment schedule to pay them off. And then if you change your exemptions so that you're going to get a refund next year, then by the time you come around next year, you'll probably have most of it paid off or a substantial amount of it paid off, and then pay the balance off with your refund coming. So there's ways of getting them satisfied, and they're probably, in my own personal opinion, they're probably the easiest lender you'll ever deal with.
Wow.
Okay, because they will accept a 5-year payment plan over the phone.
Wow.
So, you know, there's hardly any credit card system or any other bank that out there that'll accept a 5-year payment plan for $5,000 or more without knowing everything about you that it could possibly know.
True.
And the IRS will do that in a heartbeat. They just know you owe taxes, and they'll accept the payment plan straight over the phone. So they're pretty easy to deal with.
Now, how long do you suppose someone should keep their tax records?
Well, I've always told all my clients for 30 plus years I've been in business to keep the tax return, the actual tax return, forever. Okay, and because the IRS will only keep tax returns in the system for the last 3 years. They will keep, you have to request for anything 4 years or older, but you can only request 7 years back. So 4 to 7 years, they will actually get you, but they'll charge you to get it. So, and then after that, they don't have any record of it. So if you don't have a record of the tax return you filed in 1980, and you're counting on that to retire because you paid Social Security on that tax return, then, or you had a W-2 that was attached to that tax return that would have withheld Social Security, then you want to keep that tax return to prove that you've still got, you paid Social Security from then until now. So.
Got it. Okay. This year we've actually been hearing a lot of a term that's new to a lot of people. It's called fiscal cliff.
Mm-hmm.
And we were just wondering if you could help us out. It's been floating around a little bit. So what is fiscal cliff, and who does it affect?
Well, let's go back to the beginning. Let's start where it started at. It's a number one. It's a phrase that was coined by the Federal Reserve guy Ben Banneret, right? And he coined it when he was talking to the Congress at one point in time. So, but it's really two things. And it all stems back to 2011. And you guys probably remember in 2011 where the administration and Congress were fighting bitterly over raising the debt ceiling. Mm-hmm. And part of the deal about raising the debt ceiling was that there were going to be automatic things that were going to take place if they raised the debt ceiling. And those two automatic things are the fiscal cliff. There's spending cuts and there's tax hikes. So there's two things that are really involved in that fiscal cliff, and that's the thing that I just said: spending cuts and tax hikes. So the spending cuts come over the next 10 years. They have to show the Congress, or the Congress will do it automatically, that they're going to save $109 billion over 10 years. They're going to cut expenditures out of the federal budget, $109 billion over the next 10 years. More than half of that's going to come from defense. Then the rest of it's going to come from programs like Medicare and or unemployment. So there are going to be some people that are going to get smacked in the face, and especially the older people that are going to get smacked in the face if those spending cuts come through and the way they've designed them, instead of Congress doing something else. Then there's tax hikes. Well, the taxes are going to go up no matter what. You don't have no choice in that matter. The people that are going to get hit are everybody. One of the tax things that's going to increase that everybody's going to feel is the fact that Social Security is going to go up. We've been living for the last couple of years with a lower Social Security rate coming out of the employee's tax payroll than he's normally taken out. It's going to go up 2%. Well, 2% of $1,000 is $20. You know, is $20 more paycheck you're going to have taken out of your pay period. So then there's other taxes that are going to go up, and most everybody, what is considered middle income, will feel a tax hike between $2,000 and $3,500 next year. So those people are going to look for ways not to spend that in the public sector, right? Because they ain't going to have it to spend it.
Right.
So that means that businesses are going to start feeling the pinch too. So, and those are the two things that are really the fiscal cliff.
Great. So the change is CPA.com. Thank you.
Thank you.